I am pumped up and I'm ready to bring you some good solid information because who doesn't like QuickBooks?
Broken into, torn apart.
That's right. We're going to talk about QuickBooks today. Nothing gets me psyched up and pumped up quite like QuickBooks.
Worlds colliding.
Just, can't wait to get right into it. And what I'm going to do today is I'm going to bring you 3 tips. I'm Mark Olson. Luke Gibson and I have a combined 50 years in construction as fence contractors. In that time, we have both experienced failures and success. We travel the country talking with other contractors who share their experiences in hopes that their stories can make you a more successful contractor. Take 1. Right there. So what's the thing of the copper board? What's the purpose of this thing? I have no idea what it does, but it sure makes me feel good. Clap, clap. I'm going to bring you 3 tips, some of which will make it easier on you, and some of it will make it so that you're keeping better records for your bank and your accountant, which will make them super, super happy with you. Because we all want to know how much money you're making, and one of the tips that I'm going to bring you can really screw up your profit and loss report and your balance sheet if you don't do it right. So most of you guys are really familiar with QuickBooks and how it's set up, if you've been dealing with it at all. And if you're not, they have a contractor version. The contractor version is definitely more appropriate if you're going to be a contractor because they help you set up your QuickBooks from the onset to be tailored more towards contracting. But you're probably going to find that you need to go in there and make some tweaks. We're not going to get into all that today, but what we are going to talk about is one of the things we found. And we run a fencing company, and so what we like to present our customers with is what we call a lump sum bid. We don't want them to see every single thing that we considered when we were thinking about what their project was going to cost in our budget. We just wanted to present them with the total cost. So we wanted to tell Miss Jones that her fence was going to be X amount of dollars, and it was be able to put in some sort of a description about what we were going to do for that money without showing her all the nuts and bolts and every single piece and part that goes into it. What we like to do is we like to have a good project estimate. And so we're keeping track of things that don't mean anything to the customer, but yet the customer wants to see a good lump sum bid. And so what we're doing is we're hiding or we're suppressing all that information so the customer doesn't see it, but we still have access to it for our budgetary process, for our job costing, and then the customer gets the customer facing copy that they want. And so I'm going to show you how to do that. And what we do is we use something called a grouped item. So we're on our home screen now. We're going to go into lists. We're going to go into item list. Then we go down here to new. We'll just create a new item. This time instead of choosing one of these other lists, like it's an inventory part or something like that, we're going to choose group instead. And we can create a group number. We're going to call it group number 600. Give a number so we can quickly reference it. And that's one of the things I highly recommend if you're into QuickBooks is try and give everything numbers. Numbers are going to make things easier to pull up. And if you can number things sequentially so that it makes sense to you, then let's say, and QuickBooks already does a little bit of this for you if you look at your chart of accounts. So they give certain numbers depending on the classification. So expenses are one number, overhead items are another number. And so if you kind of keep that same process throughout your whole QuickBooks setup, it'll make it a lot easier for you to pull things up and find it later on. So we'll go into, we'll just call it home building. Now we can start adding some of those different items that were in there to this group. So we have, these are things that probably the customer doesn't care about, but we need to be thinking about. So we'll add masonry, we'll add wall framing, we'll add floor framing, and I'm not going to get too in depth. We'll keep this pretty short, but you're going to get the idea. So trim. And so all that'll be under our home building tab. And then once we've got everything in there, now we have this checkbox right here where we can choose to either print items in group or not print them. And this is how we're going to get all those items to be suppressed so that the customer doesn't see them when we present them with their lump sum bid. Hit OK. We'll get in here. We'll go up to customers. We're going to create an estimate. Customer job, Wanda Jones. Says we're just going to quick add her right now. Obviously, if you were going to do a customer, it's a good idea to get as much information in there as you can, but we'll just do a quick add. Now, when we type in 600 home building, you see how we have all these different lines. We have masonry, and we can go in, and because these are items, basically think of it as your labor rate and things like that. You can set a cost for each one of these. And this isn't the way I would set this up. This is just the default way that QuickBooks sets this up. What we prefer, and I'll show you how our company is set up, is we like to look at the labor that's going to be associated with each task. So you could actually come and set a subcategory for masonry and put a group for masonry and have all those show up as well. So you could do all your labor and supplies and everything for masonry, and then you could do all your labor and supplies for wall framing and have each one of those be a line item. So it really just depends on how you want to set your groups up so that it makes sense in your construction contracting. If you're a concrete contractor, maybe you want to have obviously your concrete supplies, maybe you've got forming charges that you're going to look for, things of that nature. And I'll show you in just a second how we set it up in our company that made sense for us. But when I turn this estimate over, along down here, I can put, we're going to build a 4,000 really nice home. Hopefully you're a little more detailed than that with your customer. We're going to charge them for masonry. We're going to do one at 5,000. Maybe this is just a remodel. We're going to do wall framing. That's going to be 10,000. We're just trying to get some costs in here. Floor framing, 4,000. And exterior trim, siding, 12,000. So we've got a total cost of 31,000. We've got a description down here. Now, if we want to print this, preview. So you can see right here, it says we're going to build a 4,000 square foot really nice home for 31,000. So it suppressed each one of those different lines so that I could see that on my side, but the customer didn't see that. So we'll look just really quick. I've got ours set up here. Create estimates. We'll go in here and we'll just pull up the first one that comes up in the drop down. Perfect. 611. All right. When I pull up the fencing, it's showing each one of these items. So I have fence labor, I have fence products, supplies, building permit, vehicle fuel. So each one of these categories that I'm concerned with that may impact the cost for the customer, I have that right there, and I have our default cost, whether or not that's each or lump sum. I have all that over here, which you're not going to be able to see because, hey, it's kind of our information. And then we can put the description of work down here. So provide and install fencing as follows, and then we put a description, and that's where the estimator will put in a description of exactly what we're doing, how many feet, what type of fence we're doing, if there's any removal, all that descriptive information, and then we have a good solid budget. So when we go out and perform on the project, we know exactly what we budgeted for each particular line item. We know exactly how many hours of labor we had. We know exactly how much we had for supplies, what we figured our cost of materials were, whether or not there was any freight, disposal. And the other thing that by doing this, we found is we're eliminating all that potential for error, because what would eventually happen is somebody would forget one line, and then we'd find out that line was going to cost us $500. So if we have this default bid set up where this group for fencing, they're constantly thinking about each one of these lines. They know they have to go through and make sure that they're accounting for each one of those. And sometimes the answer may be none. So if we're not traveling, there's going to be no hotel expense. But on a travel job, they're going to be thinking, okay, is there hotel expense? Did I get that? So that's one place setting up a group item can help you tremendously. Save a little bit of time and make sure that you've got a better job costing format without showing your customer all that detail that maybe you don't want them to know. So that's tip number one. Set up a group item to include all the items and then suppress them so that doesn't show through to your customer. Let's see. Tip number two is deposits. A lot of people will take a customer deposit. So it's not uncommon for us in our industry to take a 50% deposit in the fence industry and probably some of the other small trades. Maybe if you're a building contractor, you're taking a smaller deposit from a if you're getting ready to build a home. But deposits are pretty customary in our industry. The problem with deposits is a lot of people will invoice the customer for that deposit and show all that income on day one when they haven't earned any of it. And technically, by GAAP accounting standards, that needs to be shown as a liability until you've actually either ordered the material or started to perform on the job. Most people are collecting a deposit because they plan on ordering the material, and then once the material shows up and it's paid for, they can actually bill that out and stop showing that as a liability. But here's how you do that. So we have Wanda Jones's project. We're going to hit save and new. It's already assigned. That's going to be perfect. There again, we go into list and we go into the item list, create a new item, do other charge, item number. We can give it a number. So I think like 31. It's not a sub item. Amount. And so since we collect a 50% deposit, we do a negative 50% here. And then we go down. And this is where I was talking about how QuickBooks automatically sets up numbering systems for you. Ours is a little bit different, but once you know your numbering systems, like it looks like QuickBooks defaults to the 60,000s. Any account that starts with 60,000 is going to be a overhead expense. Anything that is 50,000 is going to be your job related expenses or direct costs. So kind of keep that throughout your whole system. And it doesn't matter what numbers you use, just know where they are and what they signify. When we have our team members put in receipts, they know that if they're on a job, it should start with 60,000, which is different than the way QuickBooks defaults to. Anyhow, that's a bonus tip. Where customer deposit, so we have 32,900 as customer deposits, and I had to go in and create that. So if you don't have a customer deposit set up, the easiest way to do that is go into your chart of accounts, set up a new item, and we already have that one. That was other current liability, 32,900. Edit account. So all we did was went in here and created a 32,900 for customer deposit, and then that is, you can see it's an other current liability. The difference between current and long-term is anything that's going to be taken care of within a year. So long-term liability would be something that's going to take more than 1 year. The current portion would be anything under a year. And so technically, most of you are probably going to be completing this work or working on your project within a year, so it goes under current liability. That means that sometime in the next year, you're going to have to take care of that. If the customer cancels the project, you have a liability on your hands, not a profit. The big thing most people do, like I said, is they count that as income. And then at the end of the year, if you've got $80,000 worth of customer deposits, you've already called all that $80,000 income, and you might not have put any expenses towards it whatsoever. And that can really affect your year-end income and give you a distorted view of how profitable your company is. So that's why this is supremely important. All right, so now you've got your customer deposits all set up. You come in here to, this is your home screen. You can also get to it through customers up here, but we have create sales receipts. So go up here to Wanda Jones, who is our customer, and we do a deposit. That was item 31. So her job was 31,000, so we'll do 15. So we got 15,500, shows she did that. So we've got the sales receipt, which means you have to go in and receive that deposit through your other side. Save and new. And now we can double check that and see that it showed up on our reports, contractor reports. We'll look at our, because we haven't recorded it as income yet, it should show up on our balance sheet as a liability. And it should be about the only thing on our balance sheet. Financial balance sheet standard. And look at that. So we showed the cash as an asset, and then we also showed the liability right down here. It says other current liabilities, 15,500, and customer deposits. And that's the way you want to show that. Shows we've taken the cash, plus we've booked it as a deposit. So it's basically a wash. Now, what we're going to do is we'll show you how that washes out. Bonus tip 2 is make sure you always have an estimate. An estimate gives you the ability to go back and see how that job performed when you start job costing, which we'll talk about in a later video, and see how you performed actually versus what you planned to do. But without an estimate, that makes it a lot more difficult. And the other thing that we can do is create invoices more easily, and it keeps everybody in the loop. So if you create an estimate for each project that you plan on going to, it just makes the process easier in the long run. So anyhow, we've done our bid and our estimate for Wanda Jones, and then we received her deposit. Now it's come to the end of the project, and we need to go ahead and record that income because the project's done and she's pretty happy with this. So we're gonna, and anybody that's not dealt with QuickBooks, you can create an invoice based on the entire estimate, or you create an invoice for the percentage of the estimate. So if you do progress billings, that's where that's going to come. Maybe it's the end of the first month and you've done 75% of it and you want to record 75% of it, you can. So we're going to go ahead and bill her for 100% of it. If we pull up the invoice, it's going to try and bill her for $31,000, which we already know is incorrect. She's already put a deposit down, so we want to go ahead and do 31. which is negative 50% because we've already got that in there, and you can set that to whatever you are. So if you collect 25% up front, this is where having that 50% plugged into the item itself becomes really handy. So it says that she owes $15,500 right now. We're going to hit save and new, and we'll see how that affects our balance sheet. Hopefully what it's done is it's erased that liability on our balance sheet plus shown the income on our profit and loss. So now we see that we have shown all of our income and no longer show a liability. So we have 15,000 in accounts receivable, and then we have undeposited funds from the deposit that we never received, 15,000. So all of this is showing up in our assets, and we have zero liabilities down here. So that's how we get rid of the deposit once we've collected it. So that's tip number 2. And that's where a lot of people go wrong, and not recording deposits from your customers can severely affect the accuracy of your numbers and make you think you're performing a lot better than you really are. So make sure and follow that one for your deposits. Let's see. The last one that we're going to get into is items versus expenses. And this is where people get really confused really fast when they're starting in their construction business. And they're just trying to get the information in, and they don't really understand how it works. But as you, again, go to job costing and you want to think about doing job costing, making sure that you know the difference between items and expenses is going to be important. And I'll show you a little bit about that. Vendors, so this is where you're going to see items and expenses is going to be on your bills. Here, bill, so we have a bill from ABC Lumber. There, 1, 2, 3, 4, 5 is the invoice number, and the amount's $15,000 from Miss Jones Materials, and the bill's due. So you can classify this. We can get into that in a later video. If you want to know about classifications and how that affects you, we can talk about that. Let me know. Drop a comment down below if you'd like to know, or if you have anything about QuickBooks that you would like to know in your construction business, how to do something. Let me know, because there's a good chance that I've run into it and done the research, and if I don't know the answer, I know who to talk to. Material costs. We don't use, in our business, we don't use this classification right down here that you're seeing. So terms is going to be net 30, let's say. And this is where you have these 2 tabs down here. We have expenses and we have items. Expenses, the big difference between expenses and items are expenses are overhead. Anything that's overhead needs to go in expense. Anything that is going to be job related, such as your material, fuel to get to a job, equipment rental, anything that is a direct cost and you want at the top of your profit and loss, anything that would go into the cost of the job that would affect your job profitability needs to be recorded over here. And that is really up to you to determine where that line is. But as you can see, we've got plans and permits and site work and concrete and demo and all this other stuff. We're just going to call this as framing. And this is why it's important, because now I can code this particular receipt to Wanda Jones, and I can check this as billable or not billable. We're not going to bill her for this because it's a lump sum bid like we talked about before, but it shows up as material costs. And then when we go and pull a profit and loss for that job, this will pull through and show that that was an expense on this project. If we incorrectly use the expense tab, that will never show up on the job, on your job profitability, and you'll never have any way of looking back and seeing how you performed on that project. Because we created an estimate, this will pull through line by line right across. So if we had fuel and per diem and hotels and everything, and then we went ahead and billed all of our expenses the same exact way, we'll be able to see how we did on each line, just like you would your overall company P&L. You can create a P&L specifically for that job. So that's why using items and expenses is extremely important. A lot of people get in there and it automatically defaults to expenses, and they just start plugging things in, and then that's when you make a mess of your books really fast, and it's hard to determine, you know, what was a direct cost and what was an overhead cost. So be really careful about making sure you delineate the difference between expenses and items. Expenses are your overhead expenses, such as rent, like software fees, things like that, that are going to be there no matter how many jobs you do. And your items are going to be directly job related. So that's the tip number 3, and something that I think a lot of people screw up on when they first start using QuickBooks to keep track of their accounting system. Other than that, if you have any questions, I would highly recommend that you get with an accountant that can help you get your QuickBooks set up correctly, because one of the number one things, eventually you're probably going to want a bank to look at you. And if you don't do some of this stuff right, You're going to take your reports into the bank. You're not going to know how to read them. You're not going to know what they say. You're going to hand them a report and say, can you give me some money? And they're going to look at it and laugh because it's going to be so messed up. And when you mess your books up, the people that look at this stuff every day can pick out every little mistake in your books within a matter of a few seconds. And it just lends to your credibility if your bookkeeping and your books are really tight. So make it an effort to make sure you're doing these things right. Set it up so that it makes it easy for you to use your accounting system. It'll help your accountant and your banker have good faith that you know what you're doing and you're running a quality company. So that's my 3 tips with a couple bonus tips on how to use QuickBooks for contractors in the beginning and how to set up a couple things to make it easier. If you like what we're doing, make sure you hit that notification bell right down here. It's right about here. And hit the thumbs up, because the thumbs up helps us tremendously. It lets us know that we're on the right track and that we're bringing you quality content. And if you have any other ideas or something you'd like to know more about, make sure you leave us a comment, because we're always looking for that, new ideas on things that you guys struggle with or would like more information about. And until then, you have a good dang day.